Hello, guys. Hope you're doing well. Having a wonderful week. So let's begin our class in the next few minutes. So today I'll be introducing you guys. We did the three analysis last time. We did technical, we did fundamental, and we also did sentiment. So let me just do a recap of what we did last time. So I hope I'm visible. Let me add my volume. Awesome. So I think that's okay. So I hope I'm visible. So let me share my screen so we see what we'll do today. So minute, guys. So I also have my calendar ready. So we're also going to check what we'll be doing for this week. So one moment. So also, if you have questions, you can always ask. Then another thing, also, from the next class, we'll be doing more of practical. So guys, it will be very interesting. So I hope you're following. So it's exactly 11:30. So I think we can do maybe 30 minutes or so. So 45 maximum. So we won't tackle much because now I'm introducing you guys to technical analysis so that you can be able to know how to draw support, resistance, and all these other things. So give me a few. I think that's okay. We are all on board. So in case you have questions, you can always ask. So our chat button is open for everyone. So, questions type or questions, just type or raise your hand. So as I continue. So guys, let's begin. So let me share my screen. So that today I'm going to start on technical analysis. I hope guys you're ready. We'll do a little bit of moving average. We'll also draw Fibonacci, a little bit. So now we are starting the real thing. And as we do that, we'll also see what has been happening this week. So let me share my screen. I won't take much time, guys. We always don't have enough time online, but at least we do a lot of practicals. So at least the internet today is a bit stable. You can see I'm more visible. So let's get started. So for this week, before we get started, let's have a look. Let's have a look quickly of what we are having. So today is 11 Tuesday. So we only have the Governor Bailey will be speaking around 5:30 p.m. So of course we'll expect some movement on the pound. Then we also have what else? We said every time you need to have a trading plan. So this is my trading plan. The first thing, Monday or even Sunday, first of all, is to look at this calendar. I need to know what is happening. I also have this Bloomberg around with me you can see this one, Bloomberg on YouTube. So that one is just to keep myself abreast with the current affairs. So also Wednesday, I'm seeing we have the guy who will also be speaking. So mostly this is about interest rates. So we'll do a class with you guys on fundamentals. So I'm going to show you how interest rates affect the currencies. So I'm also seeing there is USD 3:30 p.m. here. So let's see. This is Wednesday 12th. So that is this week. So we also have CPI month over month. So these are things we'll be tackling. This is a change in the price of goods and services purchased by consumers. So actual greater than, so you can see actual greater than forecast is good for the currency. So Jose, welcome. Welcome guys, welcome. So today we'll have a good time. So we also have core CPI. So core CPI guys, this is a change in the price of goods and services purchased by consumers, excluding food and energy. So because the farming industry is usually very, very volatile. So we exclude food and energy. So these are the two things. But right now, we'll check the charts. So there's in March this week. So I'm only looking at the dollar. I also have core retail sales on Friday around 3:30. 3:30. most of the Fridays, we're always having a live trading. Even last time we traded NFP, we made a lot of money. And I'm loving so far the going and how far we have come. So let's continue. So today I'm just going to introduce you support and resistance. So let's start with technical analysis. So I hope you're ready where you are. So let me get my online tool. So I think we did types of analysis. So now let's go direct to the real thing, because I want you guys now to be able to at least be able to draw this support and resistance and also understand how candlesticks work on yourself. So today I'm just going to tackle things so that next class, that is on Thursday, we'll do Fibonacci. So today, let me introduce you the technical analysis. I think I'll also touch on moving average today. So Fibonacci will be a 1 hour class on Thursday, guys. So because there's a lot to learn on Fibonacci. So let me just touch support. So for me, I'll go through, then I'll also introduce you to how it really operates. So minute. So it's here. So support and resistance. What is support and resistance? So anytime you come to the market, this is the most important thing. So this one I'll be using the chart on Euro USD. So let me pull out my chart, guys, so that at least we can see practically what's happening. So this is my chart on Euro USD. It's here. So this, but I'm using a longer time frame. So I'm using H4, as you can see, guys. Euro USD. So I've already drawn the support and resistance. So I'm just going to show you how you draw them. So first of all, you need to understand time frame or multiple time frame analysis. This is whereby you need to know how to look at different time frames of the market. So I've also added some moving averages. So I'm just going to explain. So I'll zoom out. So when I zoom out, you can be able to see the red line. Can you guys see? You can see there are two red lines here. This becomes my major support. Then there's also another one. I'll put another one up here. You just come, you click here, draw horizontal line, then you'll come and draw it up here. The highest price that this market ever reached. So this is around 1.21773. Now this will become my major resistance. So you can see, so now the market is still on a very strong upward move. Say around, let's calculate, another 25, 30 pips. So if the market breaks this price, of course, it's going to form another higher high. So we usually have lower lows if the market is going down, and also we have higher highs if the market is going up. So this is on Euro USD. Then I've drawn some averages. So I won't touch much on them. Today, I'm mostly just going to touch support and resistance on H1 and also on H4. The reason I'm using H1 and H4, you can see my charts are a little bit, visible. Look at even how this, you can see how our moving averages are crossing. Can you see like this one, this blue line, this is my 200 simple moving average. We have two moving averages. So guys, just a minute. Guys, a minute. A minute. There are more guys joining class. So give me like 2 seconds. Check it. Okay, check the group or the class group or WhatsApp. You check the link. This is where I've said for class. Okay, I'll call you for class. Watch and call. Okay, cool. Sorry, guys. It's my partners. I'm always mobilizing them. So anyway, I was talking about the moving average. So you can see there's a cross here. There's also another cross here. There's another cross here. But somehow it's like a wave, So I can also show you guys how to do something called wave trading. Wave trading is whereby you move with the wave. Like this was a good wave. You guys see from here up to here. This was a very good wave. Then there will be another wave coming. So I'm just looking for price most likely might be broken around this area. So let me just introduce you what support and resistance is. Then we can continue. So it's one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. So let's look at it. So first of all, when the price moves up and then pulls back, the highest point it reached before it pulled back is now resistance. So you can see the highest price. So if the price is going up, so I want you to imagine where you are. The price is going up. The price is moving up, then it pulls back. The highest point that it reached before it does that pullback, that is what we call resistance. So the price is moving up. So let me get my pen. So this is, look at this, guys. This is the pen here, for example. This is my price. My price is moving up. It touches my pen, then pulls back, like it's called a pullback. So that highest point it reached, that is what we are calling resistance. Then if it was going down, the highest point, now we are looking at going down. The highest point it reaches down here, now that's what we are calling support. So just understand that when the price is moving up, or when the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. When the price continues up again, the lowest point reached before it started back is now support. So I think that is more clear. So support levels indicate where there will be a surplus of buyers. So that's the support level. So in this way, resistance and support are continually formed as the price moves up and down over time. So there's usually always a pattern, like the price moves up, down, up, down, up, down, up, down. So there's something else I'll be teaching you guys called the bounce. So you'll hear things called the bounce. What is the bounce? So let's have a look at what the bounce. When buy when the price falls towards support. The moment it reaches the support, it will bounce back. It's like a ball. Touches, then bounces back. That move where it touches, then goes back, or touches, then comes back, is what we are calling the bounce. Then for the break is when the price breaks through resistance. So let me show you examples of the bounce and the break on support and resistance. So let's have a look at it on our chart. A minute. So let's look at a bounce. So let's look at pound. Yeah, like this one. Guys, look at this one. This is a very good bounce. Can you see? The price was moving up, but it touched the moving average, then came back. Then came back down. Hey guys, mute, whatever. What do you call it? Okay, I think we are mute now, so that I can be clear. So this is the bounce, this area where it touched the level. You can also see the two lines I've drawn here. This now acts as my resistance, because now when the price was moving up, the highest level it reached before this one is what now we are calling resistance. So this is a bounce. Then there's a break here. Can you see? So now here there's, let me zoom in so that you have a look. Let me put this down so that you guys can see. So this is what we are calling the break. This candle here, let me zoom in. So the candle you can see here, this was the break. It moved up, came back again. So the confirmation was this candle for this break. So that's why you're seeing momentum is very, very strong on the uptrend. And the reason is also guys are reopening. Even the UK, they should be reopening. I think they reopened on when? Monday or last week. So I've been following. So the economy is reopening slowly. So what is happening? There's more demand for spending because guys want to go back to work. Pre-COVID periods are about to happen because now people, like, the vaccines are being rolled out, the death rates are going down, the numbers are subsiding. Even here in Kenya, yesterday, I think there was only 66 cases. Positivity rate was around 3%. So that means I'm prospecting probably by the end of the month, you might have zero rate. You never know. So, but I can see at least the markets are are improving. So I just wanted to show you the break. The break is this one. Let me also show you another break. So this was another break here. You guys see? Here, this candle, this candle you can see here broke. Why? It broke this zone. This zone is now my resistance. So it broke, and then you can see the market really went down. Then this was the pullback. Guys, can you see the pullback is this one? It pulls back, then comes back again, then pulls back, then comes back. Then when you see a situation like this one, so this scenario for candlestick, the longer the candle, the more the momentum. So like this one, there was more momentum going back, going down, but then the bulls took control. So now this was when me I usually enter. Immediately after this candle, I know momentum has changed from buyers to sellers. So at least I think I've been able to explain break and a bounce. So let's continue. Okay, minute. So let's continue, guys. So here it is. So one thing to remember is that support and resistance levels are not exact numbers. Oftentimes you see a support to resistance level that appears to be broken, but soon after find out that the market was just testing it. With candlestick charts, this test of support and resistance are usually represented by candlestick shadows. So you can see here. So this is my main support, the line, the last price that the markets moved in before they were able to come back up. So I hope you're following. Notice how the shadows of the candles tested 1.47. At those times, it seemed like the price was breaking support. In hindsight, we can see that the price was merely testing that level. So how do we truly know if support and resistance were broken? There's no definite answer to this question. Some argue that a support or resistance level is broken if the price can actually close past that level. However, you find that is not always the case. So you can see sometimes like this area, it kind of dipped. So this was a dip here around this area. So this was my main support, but you can see the price dipped a little bit down here. So let's continue. So if you had believed that this was a real breakout and sold, you would have been seriously hurt. So what I do, I'm always drawing my support and resistance levels. So especially the long ones. The reason is when you draw them long, you're able to see the market more clearly. So let me put this here so that it can be able to move fast. So guys, as I'm saying, so you look at this, I'm looking at the weekly chart. So this is my highest, this was my highest resistance, this is my lowest resistance. But now where the market is, it's already breaking, it's about to break my resistance when it was going up. So if it breaks this resistance, now this becomes support. So how do you draw support and resistance? First, you'll zoom out. So first look at your time frame. If you're using 1 hour or let's use 30 minutes and zoom in. You can see I've zoomed in. So I can be able to clearly see this was my level of. Now this becomes now my support. But now the moving average, they're acting as my support and resistance. Every time the candles are above the moving average, you can see it looks like a spiral wave. It's like a sigmoid, sigmoid curve. So this now they're acting as my support and resistance. This moving average. So now for me, I'll zoom out because the idea is I always want to know where the trend is going. So when I zoom out, say I use D1 to get a clear look, D1 is more clearer. Let's now go to weekly. Weekly is even more clearer. You can see this candle is about to break this level of resistance. Now this will become support. So what I need to do on the pound, I'll just need to add more. There is the highest price here, that one. I need that one. Sorry, then I'll also need to add so guys, give me a minute. Let me get my charger. 7 minutes. So guys, give me 1 minute. So guys, I'm back. Let's continue. Sorry, my power was going down. I think yeah, I'm better now. So let's continue. Okay, so where are we? So we were here. Sorry, at least I'm charging. So I've drawn my level of resistance up here. So let me also draw my support. So guys, this is how you draw your support. So I'm going to zoom out a little bit. Yeah, up to there. Then I'll be able to see the lowest price this price was able to hit. So around here. So I think that's okay. Then I'll zoom in again. Yeah, I think just a minute. I need the exact price. Here is about the exact price. So let's move this just a little bit there. I think that's okay. So now these guys become my support. So down here, my support, you see I'm using the weekly. This now becomes my main support. And then I can add another one to get the zone like this one. So I'll just click on the line again. Then guys, look, I'm going to add it around this area. So now that becomes my zone. The reason I'm calling it the zone is because this is where we have the surplus of sellers. This is where anytime the trend can change. It can change and go to the opposite direction. So I hope guys you're following me on that. So this area, around this area, anytime it can break and move up. Then up here, this becomes my resistance up to there. So now if I zoom in, you can be able to see. So then I'll move back to a shorter time frame so that I can be able now to see how visible this is. So you can see now that is more visible. So now the moment this price breaks now the up here, we are expecting a more upward move than a downward move. The reason is I'm looking at momentum. I'm also looking at RSI. You can see RSI here. So for RSI, all I need to do, let me show you indicators. So guys, I hope you're following. If I'm fast enough, you let me know. So this is RSI. RSI shows me a relative strength index. Basically, RSI 3 and RSI 13. So I think this is okay. I can just use this. So all I'm looking at is overbought and oversold around this area. So let's look at it on now. The moment the trend keeps moving, you have to look at at a higher time frame. So for me, I'm trending it with H4 and H1 for now. Yeah, around there. So this is pound USD and this is Euro USD. So let me use this RSI. So look at this RSI. I'm going to add 50 guys. So have a look on this RSI. I'm going to add 50. The reason I'm adding is because I need to know if I'm bullish or if I'm bearish on the market. So let me add 50 here. So you just click here, add, then click 50 there, and then parameters, visualization levels, then you say, okay, that's okay. So now all I need to always check is this 50. Can you see guys? But I'll be doing another lesson on oscillators. So today I'm not going to touch more on RSI or these oscillators. So what they do, all we are looking at is on demand and on supply. That is to mean we need to know when there's much demand in the market and when there's less demand in the market. Of course, when there's much demand in the market, most of the time, the markets are always, bullish. When there's less demand, like what happened last year. So let me guys show you with this one on monthly. Yeah, awesome. You can see even on monthly chart, guys. You see why I'm using Nini. I wanted to show you what happened last year when COVID hit. Where is it? It's around here. Yeah, this was March. So you can see that this was 8th March 2020. When COVID hit, of course, the pound dipped or went down 1,663 pips. So either you can be selling or you can be waiting for this zone to capture this big buy, because after a very strong downward move, there is always a very strong upward move. So you can see right now the market is up 2,444 pips. So for me, I'm always catching the trend. The trend, if it's going up, I'm always waiting for the pullback. Then most likely I'm always buying. Goes up, waiting for the pullback, I'm always buying. If I'm selling, now it's the opposite. I sell, wait for the pullback, sell. This is the pullback again. There will be a sell here. So I'll be using either moving average or even the trend lines. But basically, the most important thing today I want you guys to learn is support and resistance. So let's continue. We almost, isn't much today. We are doing is support. So to help you filter out these false breaks, you should think of support and resistance as zones. So you've seen, I've shown you this is more of zones. I've already drawn the zone. This, the space in between, that is the zone, or that's what we are calling the zone. Let's continue. So one way to help you filter this zone is to plot support and resistance on a line chart. So you can also plot them on a line chart. So let's use the line chart. We have a look. They are awesome. So you can see this looks like a V here. Guys, you can see a big V. This so me, I'm always looking an entry around this area or around probably this area, not very far away from this zone. The reason is once the buyers or the sellers are exhausted, most likely that trend will not be anymore. So let's continue. So the reason the line charts only show you the closing price while the candlesticks add the extreme highs and lows to the picture. These highs and lows can be misleading because oftentimes they are just knee-jerk reactions of the market. So when you plot support and resistance, you don't want the reflexes of the market. You only want to plot these its intentional movements. So you can see the zones. So you can always use the line chart. So I think I've drawn support and resistance. So there's also major support and resistance. So you can see this is strong support. So the more the candles retest like this one, so the more it retests like this one, this is a major resistance, minor resistance. So sometimes you realize resistance becomes support. You can see like this resistance became now support. You can see this resistance became support. You can see. So the moment there is a big retest like here, of course, the more it's tested very many times, the candles, that becomes a very major resistance that's tested very many times. Then we have strong support. Strong support also, the candles are very many. Look at here. The candles are very, very, very many. So I think that's okay. So I think I've also showed you the bounce. The bounce like here, the ball will, you can think of a ball, especially the tennis ball. You hit the wall, it will bounce back. So that's basically what we call a bounce, whereby the price will bounce from support or the resistance that's there. So let's look at on trend lines. So, but trend lines are not hard. I'll just be drawing them. So I won't go much through them because of time. Let me just show you how to draw them. Then you go read on yourself. And then also if you have issues with setting up your system or your plan, you can let me know so that I can guide you via our WhatsApp group and via mostly the Nini. So I'll go to the summary. Yeah, here. Because as I've told you, mostly I'll be showing you support. I mean, I'll be doing practical, especially from today's class, even the next one. So you'll be reading ahead. You can use this referral site. And I'll also send you guys some materials in the group. So just give me time. I'm a bit much held up here at work. So, but I'll be sending you those materials. So let's do a summary. So when the price moves up, and then pulls back, the highest point reached before it pulls back is now resistance. So these ones we have gone through. I've also shown you about the zones. One thing remember is that support and resistance levels are usually not exact numbers. Help you filter out these false breakouts, you should think of support and resistance more as zones rather than concrete numbers. So I think you have seen here is the diagram. So these are breakout. This is my resistance here. So the moment it broke, it always goes to a pullback. It retests, then from there it moves up back again. So I think that's okay. So the same could happen with a support level. If the support level is broken, it could potentially become resistance. Yeah, we are almost done, guys. So today wasn't much. As I told you, it was more of practical. So this is also a breakdown. So on the downside, so you can see it broke, retested, then came back. So now this becomes my resistance. So let's continue. The concept is known as role reversal. So for trend lines, it looks like this. So I'm going to draw one before the class is over. They look like this, trend lines. We have upward, uptrend, downtrend, and we also have sideways trend. Then for the channels, they are ascending, descending, horizontal. So this ascending, we are looking at higher highs and higher lows. I told you about that. Descending, we are looking at lower highs and lower lows. Then we have the horizontal ranging. It looks like this. So before the time, so I think I've also touched on the break and the bounce. So most of these things I'll be doing more practical. So guys, that's why I'm saying you need to be hands-on. You need to be hands-on because at least now I need you guys to really understand how it works. So you need to have your system ready and also your, just a minute. Yeah, pull back, you can see. So let's go back within the next 5 or so minutes to my chart so that I draw for you the trend lines and also I'll draw the channel so that we know, we do a simple analysis, check how the week will be, then at least leave you guys to make some money. So I hope guys you're making money. So I'm drawing a trend line here. This is on pound. So this trend line will look like this, around there. So the trend line is around that area there. So that's our very strong trend line. Then if I draw another one here, now this becomes, so a minute guys. So you can see how I'm doing it. So this is my trend line. So let me draw so that it becomes now the channel. Exactly there. So you can see this is a very strong uptrend. So this is a channel. This is an ascending. Ascending is going up. Descending is going down. So I can also draw another one for going down from here. So I hope you're following. So I'm drawing another one. So this is an ascending going up. Then let me draw a descending. It's from here all the way down. Guys, look. It's coming exactly there. Then I'm going to draw another one, descending, it's going up to there. So these are called channels, guys. I hope you can see. Let me do this one well, like this, and then like this. Not this one. This other one. So those are my channels, and these are my trend lines. So I think this one touched most of these levels from here all the way to here. So I think that's okay. So you can see it touched here, moved up. So these are the bounce, and then this is the break. So the break was around this area. You can see. So this is my level, my zone, my level of, this is my level of resistance. I mean support, not resistance, down here. Then the break was here. So I believe that's all for today. Any questions, guys? So let me just use pound because pound is a bit more clearer. Let me draw this channel well. It needs to be, you know, sometimes they'll move out, sometimes yeah, around there. I think that's there. So any questions, guys? We're almost done for class. So before we are done, we have some few minutes. Let's look at this week, guys. So at least for me, I'm still bullish on pound because of the demand, because of everything that's happening. You know, the reopening, and also because of the vaccines rollout and all these. So most of right now demand is really coming back up. So let me check what will happen. So I hope this week Euro USD, I'm on it, and I'm also on a minute. Let's check the calendar so that we finalize. So within the next few minutes, let's finish up. I hope guys you have gotten something. So today was purely introducing you trend lines, channels, and support and resistance. So these are the very, very major things I use. So when trading, so all I need is to get the best entry and the best exit. So most of my entry and exits, I'm going to be teaching you. So all I'll be looking at is either Wednesday and Friday. Those are the big days I think I can see. So today is still a bit, not very volatile. I'll only be looking at pound. That's why I was telling you guys I'm following the pound USD. So you can see, so pound USD and pound yen, those are the two major pairs that I'm following. So any question, guys? So I think we don't have any questions. If you don't have any questions, I think I'll end my class there. So I'll be introducing you moving average. I didn't touch them today. So when I will be doing Fibonacci, or let's do moving average first on Thursday. So today we are introducing you channels, trend lines, and support and resistance. I've also touched a little bit on oscillators, but these ones we are going to do on a different class. So for me, let's keep, I'll keep trending this. I'll keep, I'll get a screenshot of this. And then I'm also going to send you on the WhatsApp group right now, so that at least you can see what it is we were doing. And also the other guys who are not in class can see. So without further ado, guys, I think I'm okay. Any questions? So do we have any questions?
I have a question.
Yes, ask.
I was asking, these oscillators and moving average,
yes,
can they be used to form a strategy?
Yes.
A trading strategy.
Yes, they can be used.
So how do you know that a breakout can assure you a trade?
What you do, you have to draw them. You see the way I've drawn them, like in zones. So what you do, you wait for it to be retested.